It's Friday afternoon, and as markets head toward the close, the critical mineral sector is once again under heavy pressure. After Thursday's brutal session, which saw Lithium Americas, Energy Fuels, and American Battery Technology tumble on the back of the Department of Energy's decision to terminate a $57 million grant, that weakness has deepened today. ABAT is down another 15%. LAC is off around 8%. UUUU is lower by about 3.5%. What makes this even more striking is that the broader market has actually traded higher today. This isn't about macro weakness, it's sector-specific, and it's sending a strong message about confidence, sentiment, and the ripple effects of government policy. So, what's driving today's continued selling, and what would it take for these stocks to recover? Let's take a closer look. First, let's start by framing this as a continuation of the same story that unfolded on Thursday. Yesterday's sell-off was triggered by the Department of Energy officially canceling its $57.7 million grant to American Battery Technology for its lithium hydroxide facility. That news shocked the market because ABAT had been one of the companies that investors viewed as a key player in building out the domestic battery supply chain. When that grant was pulled, it shattered the assumption that DOE funding was guaranteed. Investors immediately began asking, if the DOE can walk away from ABAT, who's next? Could other companies relying on government backing, like Lithium Americas with its $2.26 billion DOE loan, face additional scrutiny? Could policy shifts or internal reviews suddenly change the risk profile for what many assumed were safe, federally supported projects? Those questions didn't go away overnight. If anything, they've intensified. Today's session shows that markets are still processing the fallout. There's no fresh news headline driving this move lower. What we're seeing is a confidence unwind. Investors are adjusting to a new reality where government partnership no longer automatically equals zero risk. For ABAT, that risk is immediate. The DOE termination wasn't just symbolic, it removes a major source of funding. That means the company will now have to seek private capital at a time when the sector is under pressure and when borrowing costs remain high. Investors are asking whether ABAT can fill that funding gap quickly enough to stay on schedule. The uncertainty around that has made ABAT one of the hardest-hit stocks in the market this week. For LAC, the situation is more nuanced. The company still has strong government support, and its LAC project remains one of the cornerstone developments in the U.S. lithium landscape. But sentiment has shifted. A recent J.P. Morgan downgrade described LAC as overextended, arguing that government ownership and loans don't automatically translate into shareholder value. That note hit just as markets were digesting the ABAT news, compounding the pressure. So now, even though LAC remains fundamentally supported by its DOE loan, General Motors partnership, and long-term strategic role in U.S. lithium production, it's trading like a speculative name. That's the power of sentiment. Once confidence breaks, fundamentals temporarily take a back seat. And then there's Energy Fuels, ticker UUUU. This one's a bit different because it's more exposed to uranium and rare earths than lithium. But as we saw last year, when sentiment turns against critical minerals names, everything in the theme tends to trade in sympathy. UUUU had actually been holding up relatively well until the last 24 hours, but now even it's showing strain. Down 3.5% in an up market, it's clear that investors are de-risking the entire space. What ties all three names together today isn't just the DOE decision, it's the perception that the energy transition trade has lost its safety net. The narrative has shifted from the government is investing billions to support clean energy to the government is tightening oversight and re-evaluating funding commitments. That shift has big implications. There's also an external layer to this story, the rising tension between the United States and China. In the past week, we've seen renewed rhetoric about export controls, tariffs, and strategic resource access. China still dominates the global processing of lithium, rare earths, and battery metals. So when headlines hint at new restrictions or retaliatory policies, it amplifies fear across the U.S. supply chain. Ironically, this pressure could ultimately strengthen the long-term investment case for domestic miners like LAC and UUUU, since it underscores exactly why the U.S. government wants to build its own critical mineral base. But in the short term, these headlines drive volatility, because investors worry about costs, access to equipment, and supply chain bottlenecks. In the short term, it makes investors more cautious about names that rely heavily on government support. It also pressures valuations, because the premium investors used to assign for DOE involvement now gets replaced by a discount for uncertainty. But while that explains the sell-off, the more important question is, What would it take for these stocks to recover? Let's start with what won't work. A recovery won't happen through momentum traders rushing back in. That ship has sailed for now. It also won't happen just because the stocks are oversold. Technical bounces are possible, but sentiment-driven declines often last longer than expected. The real recovery will depend on a few tangible developments, signals that confidence is being restored at a structural level. There are 5 key signs to watch for that would suggest this sector is stabilizing and ready to turn higher. Sign number 1. Clarity from the DOE. Right now, the DOE's silence is part of the problem. The market doesn't know whether ABAT's case is a one-off or part of a wider policy review. If the department clarifies that the cancellation was due to specific project issues, not a broader pullback in funding, that could help re-anchor sentiment. Investors need reassurance that the federal government remains committed to lithium, uranium, and rare earth development. Even a simple reaffirmation of existing project support could calm fears. Sign number 2. Company communication. LAC, ABAT, and UUUU each have an opportunity to address their shareholders directly. For LAC, reaffirming the status of its DOE loan and construction milestones at Thacker Pass would go a long way. For ABAT, presenting a concrete plan to replace the lost grant, whether through private financing, partnerships, or strategic investors, would help rebuild trust. For UUUU, emphasizing its diversified revenue streams and lower dependence on DOE support would remind investors that not all critical minerals names are equally vulnerable. Sign number 3. Insider buying or institutional accumulation. When confidence is low, insiders and large investors can signal belief in the long-term story by buying shares. If we start seeing insider purchases or 13F filings showing accumulation in LAC, ABAT, or UUUU, that could trigger renewed interest. In markets like these, leadership often returns first to the names where conviction is visible. Sign number 4. Policy stabilization or positive headlines. This sector thrives on macro catalysts. Any statement from Washington reaffirming support for domestic resource production, or new funding announcements for other critical mineral projects, could spark a rebound. Similarly, if tensions with China ease, reducing fears of export controls or retaliatory trade actions, investors might rotate back into these names. Sign number 5. Technical stabilization and volume behavior. From a market structure perspective, watch for the stocks to hold above key support zones and trade with lower volatility. For LAC, that's around the $7 level. For ABAT, roughly the $1 zone. For UUUU, near its recent base in the $6 range. A few sessions of sideways consolidation on declining volume would signal that forced selling is drying up. When prices start rising again on stronger volume, that's often the first sign of a sustainable turn. When those signs begin to appear, we'll know that the worst might be over. In the meantime, it's important to remember that what we're witnessing isn't unusual for emerging sectors. The energy transition trade is volatile by nature. These companies are building industries from the ground up, literally, and depend on policy alignment, capital availability, and execution milestones. When any one of those factors wobbles, the whole sector can swing sharply. But the underlying drivers, the need for domestic lithium, uranium, and battery materials, haven't changed. Let's briefly consider what could differentiate these 3 names going forward. For Lithium Americas, the key lies in communication and delivery. If the company continues to demonstrate progress at Thacker Pass and confirms that the DOE and GM partnerships remain fully intact, it could quickly reassert itself as the flagship U.S. lithium stock. Investors are nervous, but they're not abandoning the story altogether. A clear update in the coming weeks could flip sentiment from fear to opportunity. For American battery technology, it's about survival and adaptation. Losing the DOE grant hurts, but it doesn't automatically end the company's prospects. If ABAT can announce new financing arrangements or joint ventures, even partial ones, it will show resilience. In a sector built on innovation, adaptability matters. A strong communication plan here could transform perception from crisis to comeback. For energy fuels, the path is more about maintaining consistency. As uranium and rare earth markets remain essential for the global energy and defense supply chain, UUUU can position itself as a steady operator in a stormy space. Its ability to avoid over-reliance on government funding gives it flexibility. If broader sentiment improves, UUUU could be one of the first names to bounce. Now, stepping back, it's worth acknowledging how quickly sentiment can shift in markets like this. Just a few weeks ago, the sector was being hailed as the next frontier of strategic investing. LAC had climbed above $10. ABAT was gaining traction on optimism around its DOE-backed expansion. UUUU was trending higher as uranium demand returned to focus. But in 2 sessions, that optimism evaporated. It's a reminder that early-stage sectors don't move in straight lines, they surge and they shake. For long-term investors, these moments are testing grounds. They separate conviction from speculation. And often, they create the conditions for the next leg higher once the dust settles. Looking ahead to next week, there are a few key things to watch. Any official statement from the DOE regarding ongoing project reviews will be crucial. Company updates, especially from ABAT, could determine whether panic turns into stabilization. And broader macro factors, from commodity price trends to trade war rhetoric, will continue to shape daily sentiment. If markets start to believe that Thursday and Friday represented an overreaction, we could see a technical rebound early next week. But for now, caution remains warranted. In summary, the sell-off in Lithium Americas, energy fuels, and American battery technology is less about fundamentals and more about psychology. The cancellation of a single DOE grant triggered a domino effect that exposed just how fragile investor confidence can be when it rests on policy expectations. The good news is that this isn't the end of the story. The strategic importance of these companies hasn't disappeared. If anything, it's more apparent than ever. What's needed now is clarity, communication, and patience. For investors watching from the sidelines, this is a time to observe closely. For those already invested, it's a moment to stay level-headed. The coming weeks will reveal which companies can navigate policy uncertainty and which will stumble. But one thing is certain, volatility may dominate the headlines, yet the long-term race to secure America's energy independence is still underway. When confidence returns, and it always does, it will favor the companies that communicate clearly, execute reliably, and stay grounded in real progress rather than hype. The irony here is that the same trade tensions currently fueling the sell-off are also creating the very conditions that will make these companies indispensable. The United States can't afford to depend on China forever for lithium or rare earth processing, and when policymakers move to accelerate that independence, LAC, UUUU, and even ABAT could all find themselves back in favor. Until then, this is a time to watch the signals, not the noise.